eBay. eBay was basing back and forth during a long, long bear market. But notice how the bases are loose. There was a base in March 01 that tried to break out and it failed. A base in December 01 and it failed. A broke out in June 02 and it failed. And the market's still coming down. However, those were looser corrections. And now you tighten up and the spread on a double bottom from high to low is 32 to around 27 and a half or 3/4. So it's probably no more than 13, 14, 15%. And it builds a perfect double bottom. The second bottom undercuts. And as you are turning in the general market, you can be buying it that third week and you got a perfect double bottom. And that's the start of another big winner. First stock jumping through a base as the market's starting to turn. Then it builds a flat base. That's classic. Comes out of that. Has 3 weeks tight. You have several chances to add on pullbacks to the 10-week line. You have another 4 weeks tight closes. So you're adding, and you're buying the new leader in the new bull market. And its destined move is going to carry you from whatever it is, 29 or 30, all the way up to 120. So you have one situation where you're breaking a channel line, and we sell it because of that. Now, do not buy on the next base 3 bad red weeks volume. At the lower part, the arrow is showing 3 bad weeks and low volume on the breakout. So there was a breakout attempt, and this is pretty obvious because the actual week that it broke out and went into new high ground, it was substantially lower than the prior week, a very bad sign, and substantially below average. So you can't get suckered into buying just because it's breaking out. And maybe on one day it looked all right, but neither of those weeks had any volume to it. And you build a whole new base, a double bottom, and getting a little shakeout in the double bottom helps you a little bit. And you come out of that and you buy it at your point, and that one works for you. Now you had 3 weeks tight after that, and the stock goes up and goes back and forth in the 70 area. There's a comment here that when drawing these upper channel lines, they must be done with real accuracy and thin lines connecting the correct peaks. You have a judgment call here of you're going to plot 3 points on that way moving up, and you've got to be very careful which 3 weeks you pick. We've done this on a number of charts, and I think you can study the charts and see where they were picked, because sometimes you'll have a choice of picking 3 other points. One thing you want to do is have enough weeks between each of the plot points so that it is more of a true trend, and you don't want to have it too short. Now, we say sell on the stalling week, the second blue week that goes into new high ground. Now, that's something we haven't said before to you, but of course the stock had a terrific run, and it's showing that stalling attempt there. But let's suppose that you didn't sell it, or if you didn't, would you get thrown out on that week, the huge volume on the third red week below the 10-week line? This is going to be a little bit different to buy into, but when a stock is correcting and you break below a 10-week line, the first week is much more relevant than the second week or the third week. It's how it breaks that first week. Did the volume really come in? If it doesn't, and the second week it doesn't, and the third week it finally does, that's not a danger sign. In fact, that probably is a sign that somebody is stepping in and buying the stock. The critical thing is the first week that clearly closes below the line, do you get big volume or not? And you didn't on this for 2 weeks. Then you get the big volume after it bounces off of the 200-day moving average line. So it's support volume at that third week, not selling. So you don't want to be fooled by the difference between a first week, second week, or third week. And this is something that you probably aren't going to read anywhere else. But if you read charts long enough, you figure out some of these things. Now, once you get your volume support in that third week down below the line and you doodle around a little bit, you start coming back up and you get a situation that looks like it's wedging up a little bit along the lows. And the next week means the stock moves from the bottom of the pattern straight up to new price highs, which stall to pull back in price. This is all kinds of stuff in there, but you do break out of it finally. You bounce off the line once, and You go on new high ground, you get your volume. You run up a little bit, and then we get hit with heavy volume closing below the first week down, and we would sell on that, whereas we didn't sell on the third week down in the prior opportunity. Details.